Hello, YouTube. Justin here. In this video, we're going to talk about three things. The first thing we're going to talk about is going to be Jerome Powell's two-day testimony in front of the Senate this week. The second thing we're going to talk about is going to be Joe Biden's State of the Union address. And the third thing we're going to talk about are going to be key dates that have the potential to move the stock market bullish or bearish this next week ahead. So since there's a lot for us to talk about, let's jump straight in and let's review. If you're enjoying this video at any time, I would really appreciate you smashing the thumbs up and drop me a comment to let me know what you're watching this week. Thank you for watching. All right, so today's video is going to be a continuation from the last 2 weeks where we talked about the Fed emergency meeting, and then we were talking about how many Fed hikes there was potentially going to be going forward. So Jerome Powell is going to have one of the toughest weeks of his career because everyone is watching and the stakes are incredibly high. So the key dates for this next week, and we will circle back to talk more about these a little bit later. So if you're wanting more detail, just pause the slide, read it, or just stay tuned until the end of the video where we go through this again. We're going to have a State of the Union address from Joe Biden on Tuesday. This is going to be very important because, like I said, democracy is at stake right now and the world is on edge. Jerome Powell is going to begin his two-day testimony starting on Wednesday and then continuation into Thursday. That is why they are black and underlined, because those are the most important key events here. On Friday, we're going to be getting the payroll Friday and unemployment numbers. And then we're also going to be having next week, we're going to have CPI on the 10th, the FOMC meeting on the 16th, and then OPEX on the 18th. So there is a lot of Fed data coming through right now, and it's really going to impact us. As a reminder, the reason why this matters is because James Bullard seems like a mouthpiece for the potential for Jerome to be more hawkish and to see how the market's going to react to that. Again, here he's talking about a supersized hike where we would have 100 basis points by July. And the reason why I'm re-bringing this up is because he did talk again this week. He basically said the exact same thing. He wants to see that 100 basis points by July. And the reason why I'm re-bringing up James Bullard and not the other Fed heads who spoke this week, because there were a lot of them, is because after the initial feedback from James Bullard about the 100 basis point hike by July, the Nasdaq dropped by 2%. And again, remembering that he has been punting this to Jerome over and over and over. So what we're seeing here is that again, St. Louis Fed chief defers to Powell on size of March increase. So if James Bullard dropped us by 2% and he's deferring to the chair, what could happen when we actually hear about Jerome Powell saying that, yes, there is potential for us to do that? The move lower could be very dramatic. So as we went through the key dates here, we're going to reiterate these. So now I'm going to focus on Joe Biden. And the reason why this matters is because Joe Biden is going to be setting the tone for what is going to be happening for the rest of the week. And you might be wondering, why does this matter? The reason why it matters is because democracy is at stake. The world is watching. And right now, there is more potential for harm than there is for good. I think that what we're seeing right now is likely going to be a best case scenario where the rhetoric is being ratcheted down. And I'm really going to be curious in terms of what Joe Biden focuses on for the goals for the union. Again, that's the reason for the speech, the State of the Union. Is he going to be talking about how America is going to be bracing for a potentially more volatile future? Is he going to be talking about is Build Back better? Or is he going to talk about something else? I think that he has to strike a very fine balance here between making sure people are aware of the potential for what could happen here, but also making sure that people do not underestimate what could come. So whether you are a Joe Biden supporter or not, what he says this week really matters because he is still the leader of the free world and he has a huge impact to move markets. As we noted, he moved the S&P moved by 6% from the low before his speech until after. And the next thing we're going to have to focus on here is going to be Jerome Powell. And this guy is going to be under a lot of pressure. So the reason why I chose this picture is because Jerome now has the key data that everyone's been saying he needs to make that decision. And now that we have the data known, how he is going to, again, lift his glasses down, look at the data, and then decide how he's going to move forward is really going to matter. So everyone's been talking about, oh, CPI is too high. We need to see the PCE numbers. Why? Because that's the Fed's favorite inflation gauge. And this one, too, is up by 5.2% as of Friday. And that is going to be the biggest annual gain since 1983. So what does this mean? The rhetoric is exactly what the Fed does not want. And right now we are seeing inflation fears bubble up at the worst time. So let's go through here and see what the key points are. This is from CNBC. Inflation as gauged by the Fed's preferred core PCE measure rose 5.2% in January from a year ago. That was the biggest rise since April of 1983. Consumer spending popped 2.1% for the month, considerably more than the 1.6% estimate. Orders for durable goods reflected the buoyant spending, rising 1.6 or double the expectation. So why does this matter? So the reason why this matters is because the consumer appears resilient, the stock market bounced back violently, and inflation is not going anywhere. With oil now above $100, the risk is that we could get runaway inflation. And again, the 1980s keeps resurfacing, and that was a period when there was very elevated inflation for a long time. So moving forward to the next section here, I have summarized the 4 things that I am going to be paying particular attention to when Jerome Powell speaks. So the first one's going to be inflation. The second one's going to be whether or not he gives any clues about the 50 basis point hike on Wednesday and Thursday. The third thing is going to be the balance sheet runoff. The fourth thing is going to be whether or not his path forward is changed at all by geopolitical tensions. So again, might be wondering, why does this matter? The reason why it matters is because bullet number 1 means that we've heard from every major Fed head so far. They've all said that it is time to raise rates. It is time for liftoff. However, right now the Fed is still actually providing quantitative easing, still doing asset buying. So if inflation is a big concern, I want to hear Jerome Powell say it. I want to hear him say inflation is starting to get out of control. If he doesn't, their credibility is on the line, like we mentioned before. The second thing is going to be that 50 basis point hike. And I think right now that, like I mentioned last week, if the market is baking in more than a 70, 80% chance of that 50 basis point hike, he pretty much has to do it. Because if he doesn't, that is going to be like he is providing accommodation or dovishness to the market. And I think that the risk right now, like we mentioned before, is that the Fed might be losing the narrative or the rhetoric regarding inflation. So if he talks about that supersized hike, the market has already had the pump primed by James Bullard talking about it and then other Fed heads supporting it. So again, I don't know what he's going to say. There's no point in us trying to speculate. Let's just see what happens. Number 3, balance sheet runoff. We're expecting that sometime in the early summer, this could be starting. They got a $9 trillion on their books right now, so on their balance sheet. And the reason why that matters is because this is going to be reverse liquidity. If they start running off the balance sheet, and we noted last week that there is an issue with that, the banks are concerned. What that would mean is that if we're in a liquidity-driven rally and we don't fight the Fed, what happens when the Fed literally says, we are on the highway going 100 miles an hour, we're going to go into neutral, which is what they're doing right now, and then we're going to go into reverse. If we're not fighting the Fed and we're now going into a reverse liquidity market, what should happen? You know what should happen. And number 4, whether or not what we're seeing right now in the geopolitical landscape has any potential to sway Jerome Powell, hawkish or dovish. Again, hawkish meaning bad for stocks, dovish meaning good for stocks. And the reason why this matters is because if he wants to have an out, he wants an excuse to go back dovish, he can say, oh, well, there's going to be a supply shock. That's the key word I am going to be listening to. If they don't use the word transitory anymore, they can use the word supply shock because the economy works in supply and demand. So if there's going to be a supply shock, meaning that we're not going to have the normal supply or the supply chain we normally do, prices should go up. So if he says, hey, there's going to be a supply shock because of geopolitical tensions, we have to remain accommodative, nimble, humble. That's how he can have his out and skew us dovish. I hope he doesn't do that because I think that ramifications later are going to really matter. Finally, what we're going to look at here is going to be why this all matters. After we hear from Jerome, we are going to have the March 15th, 16th meeting with the FOMC, where we're actually going to hear about monetary policy. So the reason why this matters is because, again, we're going to go back to our key dates here. And this tells us that Jerome Powell is going to be speaking after Joe Biden. So he's going to be speaking after we hear about the State of the Union. And then Jerome is likely going to have to come in and provide a sobering thought process here on why we are changing. And then we got Payroll Friday, remembering that the Fed has a dual mandate, full employment and price stability. and payroll has been pumping. It's been doing so good. So if we have full employment and inflation is still a big concern and not expected to go anywhere, what he says really matters. And then on the 10th, we have the CPI number. Then we got the Federal Open Market Committee meeting on the 16th, and then wrapping up with OPEX on the 18th. So again, one more time, the number one key thing that's going to be driving the market for me this next week is going to be what exactly Jerome says when he raises his hand and says, I testify, and this is what I think is most important right now. Please remember that Jerome Powell has not yet been reconfirmed to the Fed as the chair. And what he says right now is likely going to really matter because he's going to be getting grilled from the Democrats and the Republicans. And we know that whatever the news is, what is more important is going to be the reaction to the news. So if you've enjoyed this video, again, I would appreciate a thumbs up and stay tuned until tomorrow. And the end card here should show the video for tomorrow in terms of how we can take these data points and turn them into an actionable trading plan for our technical analysis in the video that will follow here. Thank you very much, and I wish you all the best of luck this week.